Welcome to the StockManor.com studios here in the beautiful Black Hills of South Dakota. I'm your StockManor Brian Johnson, and I'm making professional trading simple. And we had a gap down to start the day after yesterday's big move down by the Bears. We got a quasi follow-up day where it gapped down to start the morning and then started to retreat. Now the Bears certainly did not want to see that gap filled too soon, and unfortunately it did. It would have been a little bit stronger case for the Bears had it moved straight down from the open into maybe one of these lower regions down here, but we didn't see that. So, after actually after it's all said and done, and looking at the week as a whole, it's still actually bearish action. So I was a little bit, well, maybe this isn't as bearish as we thought. They did fill the gap right away, but after kind of looking at it, no, you know what? Yeah, still very bearish action, in my opinion. And you can see here on the 60-minute Dow, what we had here was this little channel that was forming, and this looked, to at the beginning somewhat like a bull flag. But once we got this major breakdown yesterday, or as this started to break down, I shouldn't say it was just yesterday, but as this started to break down, we could see that the bearish action was really starting to pour back into the markets. Obviously, we had that huge down day yesterday, followed by this little pullback, but this isn't a whole lot. And look how it's still way below previous resistance. Here are all these support resistance lines that we had on the way up. They're now once they broke above them, these were all supposed to act as support on the way down. They are now acting as resistance on the way back up. We could see maybe one more little bounce come early next week back up into this area on the Dow, but right now it still looks very bearish. On the NASDAQ, we do have these two trend lines, and it managed to pull itself back up. There was a little help along the way. Apple helped it along the way, that's for sure. We'll get to that here in just a second. But there was the Nasdaq came back up, but it wasn't really enough to be all that convincing from the bull side. They have now got a lot of work to do from the from the bull side now if they want to get this thing back into a rhythm to the upside and change. What we see here is almost a change of trend, dangerously close to a change of trend here in the markets themselves. NDX on a daily broke this little dotted line here yesterday and managed to keep and hold this area here. So this is still right at support. We could see, from here a bounce. There is the 50 below it. 1647 is the 50 day moving average below it. I would think if we touch that, we'll certainly see a bounce off of that area. But this area is very important for the bulls to hold, this little support area that we have drawn in here. They really need to try and hold that level next week. If the Bears pull it down underneath, we've definitely got something a little bit more sinister on our hands. From a weekly standpoint, and this is why I look at these at the end of the week and not the beginning of the week, they usually look one way, only to change by the end of the week. This is not bullish behavior here. Only bullish from the standpoint of these 2 days have declining volume. But to get it back below the 200 and this previous support area is certainly bearish in the long term to close it below this area. I think the bulls would have much preferred it stay up above one of these two areas instead of closing below both of them. We'll see if that adds any momentum next week as we start another one. Start another week of trading. Here's the SPX. You can see this channel we were in broke down below it, touched this 1020 area that I had mentioned in yesterday's video, and came back up to the 1030 area, which was also in yesterday's video. So we knew that 1030 was support on the way down, 1020 was support. Once that's broken, a lot of times it does become resistance. That's what we've seen here. So 1030 was broken, 1020 was not, 1030 was retested, and it held. So for the time being, the first line in the sand for the bulls will be to reclaim 1030 and then for sure 1040, and look at the amount of resistance they are going to have to get through in order to make that happen on a 60-minute chart. They've got to get above the 200, the 50, and previous resistance. So we'll see if they can make it. SPX on a daily, you can see we did close below this trend line, which is very interesting from the bear side. You can see we did bounce. off of the 50. We have not seen that action from the NASDAQ yet, but this particular move here looks very it looks very bearish at this point. I will go in this weekend, draw a few lines, kind of recalculate where we're at. It is just the end of Friday. I haven't really had a chance to truly study everything on the markets, but I would say that based on what we see here, this was certainly not good for the bulls to get down below this level. They've got about a day or two to get this back up above this, or they're going to have some troubles on their hands. SPX on a weekly, this was the rising wedge we were watching. Look how this line held very nicely, and earlier in the week it held very nicely too. You can see if I move this back, let's just do a 1 year. You can see how this week it went up, touched the top, and retreated. That resistance line has worked very nicely for 3 straight weeks. Here it stopped it, here it held it, and here it held it again. So this resistance line going way back to 2008 is serving very well on a weekly scale. This is a close below. Now you got to draw these trend lines kind of with a crayon rather than a fine point pencil. So call it either on the line, maybe below the line, but in either case, this is certainly not what the bulls want. They do not want to see this closing on a weekly basis anywhere down in this area. Volume is not all that good, but price action trumps the volume. So be watching this. Our first bounce should be right down here about that 1025 area. That would make the most sense. To get a bounce here, 1020, 1025, right where we're at, that would make sense. It might even come next week now. It'll start, I guess, a little bit over from that. So it might be, weekly resistance now might be down here around the 1000 area come next week. We'll be analyzing that a little bit more this weekend. The VIX up hard today, confirming the move to the downside over the last couple days. It did manage to close above its 20, not above that 30 point that we've been watching, but above the 20. That's a start for the VIX. This is on a weekly. Looked like we put in a little base here. Could have been a low base. Weren't sure exactly what it was going to be till we got a close either below the 200 or back above this 20. But looks like it was setting up a base for a push to the upside, obviously. And now we have it closed over and above the 20. Next week, maybe look for it to potentially push back down, retest this 20 weekly moving average. Apple